Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to you all. Hope you have a wonderful upcoming Halloween weekend. So I'm sure there'll be a lot of parties out there. October 28th. So got a lot of economic news releases scheduled for today. So we'll take a look at them. We'll start off with the employment cost index for the third quarter. Last quarter was at 0.7%. We're figuring pretty close to about the same range and actually dropped. So the cost of employment is down, which is nice. Hopefully, that means at some point near future they'll start hiring more people as the costs aren't too high on them. Personal income. We had the previous reporting negative 0.1%. We're figuring to jump up to about 0.3%, and it jumped up a little bit, but only 0.1%, so just barely a dent. Consumer spending. 0.2% was before, and we figured to jump up to 0.6, and it came into expectation. So essentially, people are earning less and spending more right now, is what it's looking like. Then the core PCE, this is the Fed's favorite gauge for inflation. We figured it would be up about 0.1%, and actually dropped down to zero. So we had no inflation, which is good news. And then consumer sentiment. It was at 57.5. We figured it'd go up a little bit, and we did have a little bit of improvement in consumer sentiment. So good news on the PCE, the personal consumption expenditure. Consumer sentiment still too low, even though it's a slight improvement, but it's still too low. Consumer spending was up a little bit, but again, on what would be the main question on that one. So, and then personal income, again, down. So that's the unfortunate part. So let's jump over headline news and. Sorry about that, folks. Keeps going. It's a little slow. So it's real light today. Light, basically, Dow is down like one or two, so it's really not much going on in the market. So it's kind of like trading. They pretty much had a volatile week, so they're probably taking today off, enjoying a long weekend. So light trading, it is down slightly, but again, it's not doing a whole lot, and there's really no other news. We got the European debt crisis, even though that won't be the end of it, kind of resolved for the moment yesterday. And so let's go ahead and take a look at the bond market and see what interest rates are doing. As we can see, we have that opening gap, as I mentioned yesterday, and we dropped quite a bit. We actually had price for the worst yesterday. Today, right now, we're heading up higher, and we're right about the 10-day moving average. Basically, right now, we're just closing this gap. I don't know if we're going to keep this momentum here. Right now, I think we're just dealing with the technicals and closing the gap for the moment. It could drop, bonds could worsen again on Monday. But right now, again, rates are a little bit better today because it's closing the gap up. And you guys have a wonderful weekend, and stay tuned for my little offer to you folks.